Good afternoon, everyone. Today is Friday. It's the second day of November 2012, and this is Brian Shannon from AlphaTrends.net. We had the market give back some of those gains, or all the gains that we had seen yesterday, but the S&P 500 did close slightly higher for the week, but definitely not a bullish action in here. Today's range was a big range, obviously, as we gapped up and completely failed. And where we saw that failure was not only this prior band of support that we were talking about at 143 to 143.50, but it was at basically right at the 50-day moving average. And now we have a declining 10 and 20-day moving average, and it's looking like we've just got another lower high in here, and that this pattern is lower highs and lower lows. We bounced from 140 and change last week, and now I think that that level is going to be in jeopardy. Obviously, on Tuesday we have the presidential, the election, and there's all kinds of speculation about what that's going to mean if Obama's reelected, or what's going to happen if Romney is elected. And the truth is, it's going to be good to get it out of the way. So we just have that uncertainty, and right now the market is telling us that it's negative to uncertain to negative, and regardless of who gets elected, I don't think it's enough to change the trend here of the S&P 500. I don't think we're going to get, if we got back above this 140, let's just say 144 next week, then and if it happens after the election, then, well, maybe I was wrong. But for now, it seems as though the trend is powerful enough that we are likely to continue to, break that 140 level, and then perhaps head down towards the 200-day moving average in the S&P 500, which is 138.08. The intraday action, of course, today was just terrible. The way it gapped up to this prior level and failed, and this is where it really became a bad picture, in my opinion, was when it dropped below yesterday afternoon support. And here we could look at a 2-day chart. You can see that that was also the pivot level for today, and that's where we really started to unwind with this pattern of lower highs and lower lows. This bounce here actually occurred right at the rising 5-day moving average. Of course, that didn't hold, but the point is, we had resistance intraday right at the 50-day moving average, and this acted as support at least for a short period of time. Now, again, just because we hit a 50-day moving average isn't the reason to sell or sell short, but as it breaks down and shows this pattern of lower highs and lower lows and is below a declining volume weighted average price, I just hit the three most important moving averages. For a daily time frame is the 50-day moving average. For a 30 or 10-minute time frame, we're looking at a 5-day moving average. And for a daily time frame, just the day that is, you want to trade in the direction of the volume weighted average price. So we've got somewhat conflicting signals still. And again, there's a lot of uncertainty in this market. Earnings have not been doing this market any favors. And, with the election again next week, that's going to put, continued indecision and fighting that gets played out in the market between buyers and sellers. So don't try to predict, but instead be aware of what the potential scenarios are. And then if we get back above 144, well, then perhaps we start to recover, and this ends up being a bear trap. But right now it's looking like a pattern of lower highs and lower lows. And given the breakdown in the other markets that they've performed so much worse, it's very reasonable to think the S&P 500 will continue down, maybe towards that 200-day moving average as well. By the way, this is the Real Tick trading platform that we're looking at by Convergix Group. And if you don't, or if you're not familiar with them, check out realtick.com. You can get a free trial for a couple weeks. And it's not just a great charting package, but it's also got a lot of other tools here for trading on it. The NASDAQ was down. Was it down for the week? I think it was down slightly for the week. No, it was up actually a third of a percentage point for the NASDAQ. And what we were looking at in here, again, this is what we look for, is prior bands of resistance. This area was resistance and looked like it's starting to hold as support. We had also mentioned, excuse me, on a blog post, I was talking about the volume weighted average price since the summer low, or actually, I'm sorry, it was from the from the beginning of the year, that since January 1st, the volume weighted average price, we basically hit upon that late last week and then have seen a little bit of a bounce there. That's also right where we have the 200-day moving average. In fact, today's close was just below the 200-day moving average, so that's the first time on a weekly basis that we've closed below it, or we would look at a 40-week moving average since late last year. It doesn't mean it's the end of this completely, or we're not going to recover. We have this prior important area, but it is, again, we have to look at it and say what we want to see is a pattern of higher highs and higher lows above a rising 5-day moving average. Instead, this market broke above the 5-day moving average. That was good for a day trade, and then today it failed. So now we're back to indecision in here. We've got this downward sloping channel in the Nasdaq, and right now we're back to the midpoint of that. Perhaps we find some support. It's going to be, it's always going to be, each week you see people saying next week's going to be interesting. Every week is interesting in the market. There's always, some great story that gets played out in price action. But right now, we still have to give the benefit of the doubt on the intermediate term to the sellers as we're below a declining 10, 20, and 50-day moving average. What could change that is, I suppose, if we got back above 66.30-ish or so, that might give a little bit of confidence to the buyers. But even still, all that's doing is putting this market a little bit more neutral. It doesn't really turn it positive. So you have to continue to have a very defensive posture in this market. The Russell 2000 this week was down 0.5%. So, we had sellers in the Russell 2000, and we've got, this trend line maybe that ends up getting tested. We're right on in the Russell 2000. We're also in here, and again, let's take a look at this. I'll show you how I draw it. Just take this and draw anywhere and just start dragging it across. You can see I don't control where that line goes, but that's the volume weighted average price for the year, which is right about $80.05. And we have, of course, also in this area, we have this 200-day moving average. The 200-day moving average is now at 80.54. So we're closed above the 200-day moving average after testing it, but we've got that same little downward channel here in the Russell 2000 as well. And this is a potential area for support at the 80 level. But so far, we've seen a little bit of a bounce that failed, and we're back down below it. So we were looking for maybe a rally up towards 83. We came very close to that, and that was my thesis, that if we got above 82, we could probably see a rally up to 83 to 83 in a quarter, where we had this prior band of support, but it wasn't likely to get going beyond that. And this failure, you've got to be quick. You've got to be aware of what the opportunities are when we see that gap higher. Do you want to chase it when it's coming into this prior band of support? And typically the answer is no, you do not want to. And when you see it breaking down like this, you've got to move to the sidelines and say, perhaps we're just in need of further time in here to consolidate and see if this market is able to rebuild some level of support in here. But right now, the pattern remains lower highs and lower lows, declining 10, 20, and 50-day moving average. The 200-day moving average is still advancing, so maybe we hold in here, but you can't, that's not enough to buy any market, is just because we're at a moving average. The semiconductors, they got above that 3150 level, and they got to the 50-day moving average yesterday. Today they came right back down. A declining 50-day moving average often acts as resistance. An advancing 50-day moving average acts as support a lot of times. And often we see, that they turn out to be turning points in a trend as well, when we're accompanied with either a break of support or a break of resistance here in the semiconductors, as we had seen, that is, in the semiconductors. The longer term picture still kind of in this pattern that we've been talking about the last several weeks, maybe months, I guess. This bigger triangle. I'm not a big fan of triangle patterns, but I wouldn't be surprised if the semiconductors do still continue down towards that $30 level on a 30-minute time frame. We're in this prior band of resistance. I'm sorry, support, which had become resistance, and it's looking like this has failed. We do have a rising 5-day moving average. average. That's again, when you have conflicting signals from various time frames, you look to the bigger time frame and you say, well, we're still guilty till proven innocent with that declining 50-day moving average on the daily time frame. Yet with an advancing 50-day moving average, the intermediate term is looking decent until it breaks support like this. So defer, in other words, to the bigger time frame, because those bigger time frames are generally going to re-exert themselves if the shorter term trend doesn't in fact find support and catch there and find the buyers enough to turn it back around. That's obviously not occurring in the semiconductors. They're still vulnerable. I wouldn't be surprised to see them down near 30. Again, what gets them more bullish? It would be a close above this 32. Today's high was 32.15. You get it back above 32.15. Maybe it's a presidential election that motivates people to do that, and things could turn. We always have to have an open mind as far as what's possible, but we have to say what's most likely and kind of give our allegiance to that. What's most likely is what we want to trade. What's possible is what we want to still be aware of, so that we're not in a reactive state if that what's possible does occur. Instead, we're able to participate with an objective, clear mindset. The financials were the group this week that did have the better performance, up 1.2%. So, for the month, they're in year to date, actually, you can see they continue to be the standouts, up 23%. So the financials have been a relative strength leader this year. We look at the, Bank of America has been really strong, and that's been the strongest stock in there. Let's just take a look at that real quick. The best chart pattern, that is, here recently, as we had seen support at $9 hold, and then it blasted out this week. Citibank has been a much stronger stock this last several weeks, but I thought that Bank of America offered the best trade possibility based on the chart. Anyways, back to the financials. We touched upon that rising 50-day moving average, and it did hold as support. So there, for people who bought the 50-day moving average, you made money. I think that this made more sense to buy over here on Thursday. That is near 1590. As it got above that 5-day moving average, we had a higher low to put our stop under, and we had this the 5-day moving average flattening to turning higher. Now we've broken back down. Let's see if 1590 holds early next week. That's going to be an important level. And then, of course, the lows for this week as well. You could say that it's starting to take on this intraday picture of a head and shoulders, and possibly that's going to be the case. We've seen a lot of destruction in this market. Let's talk about Apple for a moment, because Apple had broken this prior support. That support held as resistance. It broke the trend line. Then it broke this next level that was looking like support, and it's continued lower. It's down below the 200-day moving average. It's below that 2/3 retracement level. And I did a video for Traders Planet earlier this week saying, here's where we want to start to look for the possibility of a turn, because it's at the 200-day moving average. Also, because if you take a look at the volume weighted average price for the year to date, we're right in that area. In fact, it's 584. So on average, anyone who's participated any long in Apple is now losing money. A dollar cost averager, for instance, would be losing money, now down maybe 10 points, and the 200-day moving average is advancing. But we're still, we were looking for the possibility of support. We came down close to the lows from the last little sell-off, which was based on earnings, and that was, what was this low right in here, about 575, yeah, 570 even. So perhaps we test that, shake a little bit further below it. We're still in a downtrend. We still have an obvious pattern of lower highs and lower lows with a declining 5-day moving average. And even where it tries to get going, if you tried to play this bounce over here, you should have been stopped out quickly. There's no reason to continue to hold it. All stocks get sold at some point. They often bounce. Perhaps we're going to bounce, but what I was trying to lay out was that if we were going to get a bounce, it would have been above this prior support. We never got that. We were just looking at it as, here are some important levels, the 200-day moving average, the volume weighted average price year to date, some Fibonacci, and these are important levels that a lot of people might be looking at. So perhaps it has the ability to turn, but we want to wait for the evidence on a shorter term time frame. What would have been good to see would have been maybe something like this. If this type of action occurred, where we came up to that 610, broke out, pulled back, and then that 5-day moving average would have started to look like this, and we would have a bounce in this downtrend in Apple, and that bounce may have brought us up to a prior support level, but the pattern is still lower highs and lower lows, so there's still risk in Apple. It's getting closer to the point where eventually the buyers are able to come in and get have the conviction to make it bounce. But the point I was making on a blog post on Thursday evening was, look at how this support acted as resistance when it was broken right here. And I said, for this S&P 500, we have the same possibility that this prior band of support has the potential to act as resistance, and we could see a very similar pattern that played out in Apple actually occur in the S&P 500. That's not a call; it's a possibility. We have to be aware of all possibilities and trade the highest probabilities. Right now, the market isn't giving us real high probability trades in either direction. I guess you could argue that it is on the downside, but we've got those, that 1.5 day bounce that just brutalizes the short sellers for a bit. So you have to just go slow, listen to the clues that the market gives us, and be able to interpret them and be prepared again for all possible scenarios, so we're not blindsided by what ends up actually happening. That'll do it. Thanks for tuning in, and have a good weekend, especially to those on the East Coast, New York, New Jersey area. I hope that everything quickly gets back to normal for your lives. I know it's been a huge interruption. Thanks.